the tax benefits, the growth, the inflation protection, all those things, real estate is the only viable alternative that's going to help you, predictably going to get you where you want to go, and also protect you from the market environments that we're talking about when you invest for cash flow, if you do it the right way. What's going on, cash flow hackers? It's Chris with Life 180, and for this video, I want to talk about the number one reason that you should be investing in real estate right now. And I know there's a lot of reasons that when you look around the world that people are saying probably shouldn't invest in real estate, the bubble, prices going up, Zillow just stopped buying houses, all these different things. But here's the bottom line. The number one reason, and I'm gonna give it to you, and then I'm gonna get into more detail, so I promise you, just stick with me. But the number one reason you need to buy real estate is because there's no other alternatives that make any sense right now. Like, and before you counter me on that, I want to encourage you to just kind of like play through this with me a little bit, because I'm telling you right now, if you look at the world we live in and you look at the challenges that the economy is facing and that our future is facing, listen, there's a statement that I make a lot, and that statement is the next 40 years aren't going to look like the last 40 years. That's just a fact, right? And I was actually just listening to an interview with Robert Kiyosaki, and he actually said if you think the next 20 years are going to look like the last 20 years, you're going to get creamed. That was a quote, right? If you think the next 20 years are going to look like the last 20 years, you're going to get creamed. And so here's the bottom line. When you look at the world around us, there's no other alternative right now of any asset that's going to give you what real estate can do. You know, crypto is awesome. There are a lot of things that you can do. I think everybody should have some exposure to crypto, no doubt. I think there's a lot of opportunity there. But like, when it comes to the tax benefits, the growth, the inflation protection, all those things, real estate is the only viable alternative that's going to help you, predictably going to get you where you want to go, and also protect you from the market environments that we're talking about when you invest for cash flow, if you do it the right way. You know, one of my good friend and fellow cash flow hacker, Mike Wolf, who I've been doing a lot of videos with, and you're going to see a lot more of him as we start doing more of this cash flow hacking stuff. You know, he always tells me about his story about 2008 when the rest of the world was getting massacred in the real estate bubble, right? And he said, listen, Chris, I lost half of my net worth. But at the same time, I didn't care, because my net worth doesn't matter to me. What matters to me is my cash flow. And for him, while his net worth went down by 50%, his cash flow actually went up, right? And because his cash flow went up during that period, and because of all these other assets being depressed in value, that cash flow didn't just go up, but it was worth more at the same time, right? And that's the power. So when I say the number one reason you need to buy real estate, or that real estate is the best option for you, is because there's no other viable alternative. Look at the world around us. And I've done a lot of videos on this, but take a look at this. If you look at the interest rate environment, and you go back to, like, it's funny, my life has like almost come full circle. In 1980, interest rates were 19 to 20%, right? So to go get a mortgage, you had to pay 22% for a mortgage, right? So from 1980 to 2009, interest rates just kind of slowly ticked down, right? They slowly went down. And from 2009 to now, they've been at all-time lows, but what have they done? They've done QE1, QE2, QE3. They've done, you know, with COVID, they've done these programs that pay you for being unemployed, give you bonuses that incentivize you not to work. They've been printing trillions of dollars. You know, we've actually printed 33% of all the money we've ever printed in the history of our country since September of 2019. So like, we are coming up into inflation like we've never experienced before. And when you look at the nature of our currency, it's all going to be realized very quickly, because from 1980 to 2009, with the interest rates going down, if you don't understand how inflation in this country works and how the Federal Reserve works, which I'm not a big believer in the Fed. I mean, the Federal Reserve it's like the biggest oxymoron in the world. First of all, it's not a federal government, it's a private bank, so there's nothing federal about it. And a reserve would imply that they have reserves of capital. No, they just print money, right? So there's nothing there. But when you understand how inflation works and the Keynesian economic model works, if you understand how John Keynes was an economist back when they first created this theory of having an elastic currency and having central banks like the Federal Reserve be able to raise interest rates when inflation was getting bad, and the purpose of raising rates was to pull money out of circulation, keeping inflation under control. And then the idea was reduce interest rates when times were challenging, right? And that way it would be able to pour more money into the economy. So think about it, from 1980, and that's a key thing to understand. So from 1980 to 2009, we had this downward trend in interest rates. It went from 20 all the way to basically 0 from a federal funds rate perspective, right? And when you look at that, what does that do? Every time the interest rate goes down, what does that do? It makes your payments for your mortgage more affordable, your payments for your car more affordable, your credit card bills more affordable. You know, it makes all debt more affordable. And so all these ideas, all these theories and concepts about how to invest, we've been living for 40 years in a declining interest rate environment. So when you do that, that jams stock prices go up. Heck, real estate prices go up too. So I think what we're going to see is you need to stop thinking about investing in things for appreciation as much as we have over the past 40 years. And the reason I say that is because we are now at this all-time low level of interest rate environment. We're also at low taxes. Our government is at an all-time high in debt with almost $30 trillion in debt. So ultimately, interest rates have nowhere to go but up. Government debt is, I don't see how they're going to get it under control. I just don't. And so we're going to lose confidence of the world as the world's reserve currency. And I don't know if you know this, but we've been financing our lifestyle by the rest of the world, buying our bonds and stuff like that for decades at this point in time, right? And so that is going to catch up with us. And so when you look at that, and when you look at the fact that because of that debt, taxes are going to have to go up, right? Like if you really think about this stuff, then and you use some common sense and you look at the principles involved in how money works and how the economies work and how asset prices are impacted by market factors, right? Then you realize the fact that your 401k is a really bad place to have your money. Your IRA is a really bad place to have your money. Your stock, any stock right now, is really volatile because what's happening right now is inflation is going up. That's putting pressure on companies, period. It just is. It's putting a ton of pressure on companies. And so how that impacts share prices, nobody really knows. But what I do know is taxes have to go up. Who are they going to come after? They're going to come after the wealthy and corporations first. That's going to hurt stock prices. It just is, because that's going to eat into margin. It's going to eat into their earnings per share, right? And so therefore stock prices are going to come down. You know, and when you look at all these things, all these factors that come into play, it shows you that stocks in an increasing interest rate environment where debt is, and they're not going to be able to leverage and all that stuff, debt is going to become more expensive. That's going to eat into the profit for a company, which is going to drive stock prices down. It's going to hurt performance. It's going to take more money out of the economy, all these different things. And we don't know how inflation is going to affect everything. We don't know how the government debt and increased taxes are going to affect everything. But what we do know is that when you own a hard asset like real estate, you have that asset. No matter what's going on in the world, if you have that asset, you have the cash flow from that asset. I'm not going to sit here and tell you that inflation is going to happen or deflation is going to happen and that there's going to be massive austerity to rein everything under control. It depends on who you listen to. There's a lot of different people with a lot of varying opinions. And honestly, I've listened to them all and I respect a lot of them, the Peter Schiffs and the Harry Dents of the world. And I love listening to them. I love their opinions. If you haven't checked them out, check them out. But they're on two opposite sides of the pendulum on what's going to happen. And I'm not going to try to even guess who's right because they're far smarter than me. But what I will tell you is that no matter what, if you have real estate, you're protected. Because if we do have austerity, it means the rest of the world is struggling. But at least you own this hard asset, right? And at least the cash flow associated with that asset will be relevant to the environment and the world around us. And if Peter Schiff is right and we have runaway inflation, right? At least we know that the real estate is a hard asset. If we have inflation, it's going to go up in value accordingly. Rental prices are going to go up in value. Your cash flow is going to go up in value. Everything is going to protect you, or that it's going to protect you if you buy it the right way. So it's kind of like Mike Wolfe's story. No matter what, if we have austerity or if we have a recession and the housing prices go down, at least you have this cash flow that's there to protect you. And if they go up, you're protected. So no matter what, I'm a big believer in making a plan that will help you be successful in any market environment. And that's what cash flow hacking is all about. I hope you found value in this video. If you did, please hit that like button. If you haven't already, make sure you hit that subscribe button, hit the bell. That way you get notified every single time I launch a new video. And that's it. Hope you have a blessed, inspirational day. We'll talk to you soon. Take care.